cutting edge guests, awesome, uncensored, jaw-dropping information, plus funny memes, good deeds, and loads of laughter. Kind of have it all. Ladies and gentlemen, if your soul's awake, then welcome, because you're in the right place. Hey everybody, good afternoon and good morning wherever you are, ladies and gentlemen and boys and girls. I am Brad Wozny. Welcome to the Sovereign Soul Show. We stand for love, levity, and liberty. And we had never anticipated doing a weekly financial market update as part of our show. You've seen at least 3 so far because it's so freaking insane that this has never happened in human history at a point in time like this. And with all of the people that have been viewing and that we've got the initial information from, they were like, we need to stay on top of this. A couple of the reasons why, if you're tuning in for the first time or hearing this as the audio podcast, number one, your financial advisor legally cannot tell you what you're about to hear here because they can lose their job because of a thing called selling away. We'll get into that. We've also shared that in our last video podcast last week with Dr. Kirk Elliott here. Number two, Dr. Kirk Elliott is based in Denver, Colorado. He's one of those guys who has shunned Wall Street. He is a sovereign investor, wealth advisor, PhD economist, PhD theologian. So he's all about the sovereignty of humanity, taking a spiritual aspect to wealth and abundance. And there's one asset class out of all 6 that have actually gained a 10.2% on average return over the last 22 years. He's the economist that's bringing this to the forefront. That's why your financial advisor cannot tell you about this and what to do and working with him, because they would lose their job and many portfolios are down. I have friends and family, portfolios are down up to 50%. As Tony Robbins says, if you lose 50% of the market, you need 100% to recover. We have seen and heard, and Dr. Elliott's been sharing, that the market has zero recovery. Now, this is not about creating fear. This is about creating competency and making sure that you have an understanding of what you need to do to stop the bleeding, stop the pain, start moving into the survival mode on the financial portfolio with the opportunity to really thrive in a serious potential for generating massive amounts of wealth, literally in the next few years, just with this one asset class. And Dr. Elliott, I just watched your market update yesterday that you did for us as clients. Phenomenal. So please share with us and everybody here, what is going on now, just in the last hour by hour, it's changing.
Yeah. So literally, last month, the IMF basically said, the global growth for 2022 is slowing down, right? So, and we all know that and they blamed it on who? They blamed it on Putin. Because, hey, you're not going to take the blame for it yourself. Nobody ever does. Yeah. When you've got issues that you've created, like inflation, because you're printing money out of thin air to fund all the stimulus. Yeah. Then you raise rates to slow down that inflation. Then you've got higher taxes at the personal level, at the corporate level, and capital gains level. And what about the unrealized gains, like on cryptocurrency that they're wanting? It's like, okay, everything that they're doing causes economic slowdown, but yet they're blaming it on Putin because, he's an obvious choice, right? To blame something on, because nobody likes him. So anyways, they blame that on Putin. But then the World Bank, literally just not even a month after the IMF slashed it, they cut their forecast for growth to 2.9%. See, the World Bank had came down to 4.1%. Now the World Bank says it's 2.9%. So that's a 1.2% decrease, right? But it's not a 1.2% decrease. When you come from 4.1, you take it down to 1.2 and it ends up at 2.9. That's a 31% decrease in the growth forecast for the global economy in 1 year. 1 year. It's like, oh my word. So, but that came down in just the first 5 months of this year, right? So it's like, I don't see a good outcome moving forward. I really, really don't. But what I want to do is tell some of the misinformation that David Malpass, who's the president of the World Bank, is saying, right? So, because it's actually insane what he's saying. So he said growth global growth is being hammered by the war.
Yeah.
True. That's true, right?
Yeah.
It's being hammered by lockdowns in China. Okay. That's monkeypox. It's just a pox, right? Supply chain disruptions. That's true. The rising risk of stagflation. It's like, hello, McFly. There already is stagflation. It's not a rising risk of it. It's here. So what is stagflation? It's a sluggish, slowing down economy with higher prices, meaning mom and pops don't have enough money. Business is slowing down. They're hardly making ends meet, but yet prices are going through the roof. That's like the worst of all possible scenarios, right? So then they have a period of weak growth and that we haven't seen since the 1970s. And he said more and more countries are having a problem with a potential recession. It's like, oh my word. Okay, what do you mean a potential recession? The global economy has been slowing down since mid-COVID times, like in the end of 2020. So that's like 5 quarters, 6 quarters worth. A recession is 2 quarters worth of economic downturn. A depression is 3 quarters. It's like, buddy, we're in the midst of a depression, right? So we've got problems, and they keep mincing words. They don't really tell the full truth because they don't want to take the blame for it. They have to pass the blame on to somebody else like Putin. So this is the kind of numbers that we're seeing lately. What else have we seen? So 2 weeks ago, the S&P 500 was down for the 8th week in a row. Okay, that's a big deal because not since the Great Depression have we seen 8 weeks in a row of declining stock market growth, right? Just been declining. Well, then last week it was down again. So that's week number 9. This week so far, it's down again. That's week number 10. Right. 8 weeks was the record since the Great Depression. Right. Well, we're now at week 10. I don't see any slowdown to that when the fundamentals that cause stock market growth are what we don't have, right? We don't have lowering taxes. We don't have lowering interest rates. And we don't have increasing jobs. We have decreasing jobs because they're still paying people to stay home. So everything that they are doing is actually the opposite of what needs to be done to actually grow the economy. So as you're seeing this, you've got people like Elon Musk, he had the classic Elon Musk statement, 4 days ago. And he said, I feel super bad about the economy. Therefore, I'm going to lay off 10% of Tesla's employees. Yeah. Okay. Tesla has 100,000 employees, so they're going to lay off 10,000 workers. Wait a second. Electric cars, the price of gas is sky high. The price of diesel fuel is at an all-time high at $5.62 an ounce. Why wouldn't people want to buy electric cars when the price of oil and gas are soaring because of Brandon's economics? Yeah. Well, it's because people aren't going to be able to afford to buy those expensive electric cars, right? So Elon Musk is seeing this and he's saying, I got to lay some people off because I need to show profits to our shareholders on the quarterly meeting. There's 2 ways to show profits. Number 1, you increase revenues. Number 2, you decrease expenses. What's he doing when you can't increase the revenues? Well, just decrease the expenses, lay 10,000 people off. See, these are the weird games that are starting to be played in the stock market because it's getting so bad. Nobody is actually making money to actually spend and grow the economy.
Yeah, it's quite it's a distraught. Like everybody that I've spoken to at some very wealthy folks all the way down, they're distraught. I mean, some of them are actually stuck in fear. And Dr. Elliott, you had shared with us on our original, very first hour-long podcast, the inflation numbers and what true inflation was. And this is just a month ago, that it's 25% versus the reported at the time, 8.3. Can you just touch on that for those people who are new watching this for the first time?
Sure. Yeah. So this is what I did my dissertation on. I developed a new methodology for measuring inflation for central banks because the way that they have it now is broken. So if you look back to 1983, for example, interest rates are 18%, right? Why were interest rates 18%? Because inflation was around 15% at the time. So the only way that interest rates will slow down inflation is if the interest rate is equal to or greater to the inflation rate. So you have to fast forward to today. Is inflation really 8.3%? No, it's much higher. Why is it higher? Well, if you go back to 1996, President Clinton changed how we measure inflation. So he appointed the Boskin Commission, and really what the Consumer Price Index, which is the official measure of inflation, is a basket of 30 goods. So you take that basket of goods and let's just say, and it's all weighted, right? So let's just say steak is one of those items, and the price of steak went up 40%. So the people at Bureau of Labor Statistics are scratching their beard and thinking, we don't want this. This is going to cause inflation to go up too much. Let's take out steak and replace it with hamburger. See, that's called substitution bias. So the price of hamburger was 30% less than steak. Remember, the price of steak went up 40%, hamburgers 30% less. What did they say happened to the price of steak? They said it came down 30%. It didn't. They're measuring something different. So this happens across the board with the Consumer Price Index. So if you compare apples to apples of how they measured inflation in 1983 till today, simply take the official inflation rate, which is like 8.3%, the core CPI, multiply it times 2.8. That's how you get, I mean, that's the algorithm behind how we measure inflation to get the true rate based on my research. So, but because in the money creation is just out of control and we've never seen it like this, I think that 2.8 multiplier is actually low at this point because we've never seen the money creation like we've seen, but that'll get you in the ballpark. And with that multiplier, we're at about 25% inflation.
Yeah. And the mortgage rates are going up like crazy. We're seeing housing crash. It is the crater we've seen coming. It's finally hitting the mainstream media. And when the left mainstream media is saying that housing is starting to crash, I mean, they have no hope of trying to keep a lid on that. And in addition to that, what we've seen just recently over the last week and a half, and you shared this on our last weekly update, that there are multi-billionaire hedge fund managers that are pulling the chute. They're getting out, they've got out of the market, and they say the only way to allow inflation to take care of itself is let it go to zero. Is that still what we're hearing from them in the Fed?
Yeah. So I mean, when you can't fix the inflation there's two ways to fix it. You can either raise rates to 25%, which they're not going to do because that'd kill the economy. They don't have the guts. Or you could stop stimulus money. Well, they're not going to do that either because nobody wants to kill the economy overnight with their policies. So therefore, people like Barry Adelson, one of the largest hedge fund operators in the world, he's a multi-billionaire, said he believes they're just going to let the markets correct. They're just going to let the markets correct and go down to nothing because that will bring inflation down. Well, what happens when that happens? They're going to have to print money without excess, they're just going to print it like it's going out of style. That will devalue the currency. Throughout history, Brad, there's been no fiat currency that's ever lasted. Ever. 100% of the time they go to zero. So we're not playing with good odds here. If you're going to Vegas, not playing with good odds that the US dollar is going to survive because it's a fiat-based currency like everything else is. Just because it's America doesn't mean that we get to defy reality, right? We don't. It will come crashing down like every other fiat-based currency in the history of the world has. When people lose credibility in the system, when the demand for the dollar goes down, its value will continue to erode because they're going to have to print their way out of things. Yeah, exactly. And two great points that are out there in the media online, everybody can find this is, number one, over 3 billion, over half of the world's population on March 22nd, and continuing to unplug from the fiat currency system. They've wiped them off the SWIFT banking system. They've moved over to a gold-based standard. You have three major countries in terms of population and economic superpowers by virtue of this: Russia, India, and China, that are creating their own system to trade with each other. Every week there's new EU countries that are coming out saying that they will move into Russia rubles to buy natural gas and commodities from Russia in order to supply them. We've just now seen wheat exports going from Ukraine through Turkey with a broker deal from Russia and Turkey to demine that area and provide sovereign security for grain transport to the Mediterranean.
That just happened a few days ago as well. And so, you know, one of the key things is there's one asset class that in everything throughout human history, one asset class that everybody gets tied to that goes up in a fiat currency wipeout system. And we've seen it in recession, depression, and now we're in the world's greatest depression in history. I'll let you go ahead and share, Dr. Elliott.
Well, we are in the greatest. I mean, because we're at a point now where the debt, it's completely unsustainable. If you even look at like the derivatives debt of the banks, yeah. JP Morgan Chase has about $30 trillion in derivatives. So does Bank of America. That's more than the national debt of the country. Just so when that
they could be insolvent, that the actual banks themselves could be insolvent by virtue.
Yeah. Yeah. I mean, how can they cover $30 trillion that they're not worth that much, right? So here's the problem is we've got a solvency crisis, a credit crisis with the banks. They just are lacking capital when these things start to implode. You've got unsustainable debt, highest we've ever seen. So to put this into perspective, when you measure your gross domestic product to your debt, you get a ratio, right? So if your debt, a good healthy level would probably be like 50% of GDP.
Right.
So I remember about 10 years ago, we had gotten up to about 80% of GDP. And it's like, everyone was thinking, oh my word, this is getting kind of scary. Because if you ever get to 100% where your debt equals your gross domestic product, that country has never survived.
Yeah.
Never survived. Yeah. Well, we're at like 109% now. I mean, we've surpassed that. Where there's only a few countries in the world that are worse than America right now. I mean, we have more debt than we have GDP. And when you get to 100, that's, you know, mathematically, those countries never survive. They change currency or they change government from a democracy to a dictatorship or a dictatorship to a democracy kind of a system. Well, when we've got a democratic republic, we're going the other direction. You can see that politically. We're going down the socialist communist road in America, like, well, sorry, Brad, but almost as fast as Canada, yeah. Right? So
exactly. So too far.
I mean, it's looking rough. And so when you have that, when our debt is so, I mean, you have to pay the piper. Yeah. Our debt is more than our gross domestic product. And that's very difficult to recover from. In fact, you really don't without a change in currency, without a change in political system. Yeah. That's what the historical numbers tell us.
And so what people can do right now to stop the bleeding that they're having in their portfolios and potentially thrive and get involved in achieving wealth, you know, throughout this depression. What's your message for them?
You have to buy things because things go up with inflation, right? So oil and gas are things, they go up with inflation. Cars, used cars are up 40% year to date. I heard Biden's new press secretary say the price of gas has only gone up $1 in the last year. It's like, okay, if gas started at $1, sure, I believe it went up $1 because the real numbers are it's doubled, but it didn't start at $1. It's now up to almost $5 a gallon, you know, across the country. Yeah. So what else is a thing? Gold and silver. What I love about gold and silver, it's 100% liquid. It's a 45-second phone call when you want to lock in profits, and we just wire you those funds. But we're talking about physical. You're taking delivery of it. Somebody takes delivery of it either at home or in your IRA or at a depository. So this is what's awesome about it. We're not talking about paper. We're not talking about mutual funds, ETFs, stocks, anything like that. Physical 1,000-ounce bars of silver, 100, 10-ounce, 1-ounce, gold American Eagles, because they are physical commodities. Anything physical goes up with inflation. And that's why it's the perfect hedge in an inflationary storm.
Yeah, exactly. And with the gold and the silver, we're seeing a massive market pressure on the demand for that, and then also shrinking supply. And by virtue of that, in my economics 101 class in Wilfrid Laurier University, supply and demand, price goes up. And right now we've seen a great stable suppression of silver because JP Morgan Chase Bank is one of those banks that got fined by the DOJ and the SEC about 1.5 years, 2 years ago for suppressing that price. You know, total criminal fraud. We're seeing a bit of that right now, but in all other things, this is hanging on to it, and you could ship it right to your house, which we love as well. Instead of holding an ETF, which when we did our research, and you also shared with us, Dr. Elliott, that if you have an ETF, like back when they were suppressing it, and who knows if they're maybe still suppressing it, wink, wink, that's my intuition as well, is they could not pay the IOU. So folks, for example, if you bought through a stock traded ETF of silver or precious metals at that point in time, which was found by the DOJ and the SEC, if 5 people owned the same piece of paper, but if they wanted to pull it out of the market from a supply side, they couldn't provide that. JP Morgan Chase in that example. And this is extreme, right? This is extreme corruption across the greatest levels. People have used the word bankster. That comes to mind. And right now, the thing is, own something tangible that you can touch it, feel it, ship it into your home, or hold it in a secure depository. And by being a wealth advisor, you actually had previously advised on stocks throughout your career. Now you say stocks are toxic, buy gold and silver. And that's one of the things that you guys do at kirkelliottphd.com/soul. That's where people can book an appointment with you and speak to you and your team, Dr. Elliott, about what they can do on their portfolio. Like I've had a number of friends and family just recently in the last 2-3 weeks, and other ones of my loved ones. In the States, they've rolled over their IRAs entirely without penalty, and they're happy with that because they've just seen every week by week the market continues to crash, absolutely crater. Anything to those points?
Well, yeah. I mean, when you look at the stock market, the NASDAQ, it's down 32% over the last 6 months. That's on pace for a 64% correction over 12. That's huge. You look at the S&P 500, the broadest base, that's down about 21% just year to date. Yeah. Well, that's on pace for a 42% correction. So when people call me, they're gripped with fear. I mean, paralyzed by fear, right? So because they're seeing their stock market assets erode, their IRAs, their 401ks, and they're just gripped with fear. And it's like, if you don't do anything, you should be gripped with fear, because if you don't do anything when something changes, and you expect a different result, isn't that the definition of insanity, right? So when you see the markets changing, you have to adapt. You have to do something different. Well, that's what we do. We step out of the box, go into gold and silver, tangible assets. This is how we can have a smile on our face, even while the stock market's eroding right before our eyes. We're on pace for the largest corrections in the history of our country. I mean, this is looking worse in 2009, worse in 2000, because it's not just a subprime lending bubble. It's not just a tech stock bubble. It's an everything bubble. Yeah, it's an everything bubble. And so when that cracks and crashes, people are going to get hurt if they don't do something different.
Yeah, most definitely. And we were talking about the pegging price. So you can go to, by the way, you can go to kirkelliottphd.com/soul. That's where you can schedule an appointment with one of his advisors as soon as freaking possible. I would say right now, I mean, you've dealt with people from grandmothers from $300 in their retirement account all the way to clients who are multi-billionaires. And to this point that we're discussing right now, where people are watching things crater. Being a Canadian in Vancouver back in the day, I had some physical silver. This was a year and a half ago, maybe 2 years ago, not long, right? Just right around when the lockdown started. So yeah, 2. And I had physical silver and I was showing them. I was just kind of getting an idea. And it was one of those nice and glitzy things, kind of like the jewelry that I'm wearing right now, actual silver, but I wasn't hawking this. I was just kind of getting an idea of the spot price. That was different than the actual spot price. And it was less if you ever wanted to go to a wholesaler. So one of the key benefits we learned from you is what you're selling for is what you get. And at the same point in time, explain, if you don't mind, the differential between gold and how silver is pegged to gold and where it is right now, and why you anticipate a massive exponential upswing once the suppression of the silver pricing comes off.
Yeah, well, there's a historical number. That's a great question. There's a historical number between silver and gold. How many ounces of silver does it take to buy 1 ounce of gold? Historically, that number is 20. It's 20 to 1. And that goes back hundreds of years. Okay. I mean, we can look at the data. It goes back hundreds of years. Now, it hasn't been that over the past 20, but it doesn't mean that it's not going back there, because it's literally for hundreds of years, that's been the ratio. So now, as the markets move, it's going to have a tendency to pull back towards that historical ratio. So, but right now, where are we? If you multiply the price of silver times what to get gold, what is it? It's 80 to 1, right? So it's not 21, and we're at 80 to 1, which is 4 times the historical average. So what that tells us, that number is either gold is overvalued or silver is undervalued. Well, I don't think gold is overvalued because what causes its growth? Inflationary pressures, political chaos, geopolitical conflict, unsustainable debt. We have all of that in spades. So therefore, the price of gold is going to continue to go up. So that means the price of silver is going to play catch up because it's just undervalued. So when that ratio comes from 80 to 60 to 40, right? 40 to, compared to 80, it's half. That means if we were to sell our silver then, go into gold, I get you twice the amount of gold then than what I could have purchased today. Not much better than something free than free gold, right? If you get back to the historical number, you can double your ounces of gold yet again.
Yeah.
See, I don't care which metal we're in. I don't care if it's gold or silver. What does the ratio tell us to go into? That's how you minimize your risk, maximize your return, move in the right direction, and always be, well, I shouldn't say always, the majority of the time you're in the right place at the right time. That's how you minimize your risk.
Right. And you've got that slingshot, to me, I think of it as that elastic band analogy, right? So if you're trading at over 80 to 1, 81 or 83 to 1 right now, where we are with the price of gold versus silver, and then it slingshots to where it should be, just simply where it should be based on historical, you've tripled your value just by virtue of the markets correcting. And with the crash, it's inevitable that the markets will correct on the price of precious metals, silver being the one that has the most extreme opportunity. And then with your firm, what you allow them to do, which we love about this, Dr. Elliott, is you guys are always in communication with us as your clients, and you're sending out the market reports and going, okay, when it gets up here, maybe now we move that silver into gold, gold comes up, and then you ride that slingshot effect. And that potential can be, for your lifetime, if people choose, or eventually if the new stock market, whatever it is, comes back, because we know that this cannot happen again where it is. It's going, billionaires are pulling out. And speaking about the price of gold, I've got a note up here. I believe it was the chief economist of Morgan Stanley. I may stand corrected on this, but it was expecting gold could be $10,000 an ounce by the end of this summer, with an anticipated $18 per gallon gas in the United States by the end of the summer. Have you heard anything to that effect?
Not to that extreme. However, by the time the bull market is over, I've heard those kind of numbers all the time. Yeah. So whether it takes 6 months or whether it takes 3 years, who cares, right? Yeah. When you're seeing that kind of massive growth, because what's it now? It's not even 2,000 right now. So that's a multiplier of 5.
Yeah.
I mean, good grief. I mean, if you could get a 5 times multiplier in 3 years, 2 years, 1 year, 6 months, you're not going to care how long it takes to get there. But this is the direction that it's going, right? And if you get to that point in gold and the ratio of silver catches up to 40 to 1, then to 20 to 1, oh my word, what's the price of silver going to be? It's going to be through the roof, right? So this is why we're allocating into silver, because if gold does that much, silver is going to play catch up, and you just then compound the number of ounces of gold that you own. It's not magic. It's just simply math.
Yeah, it certainly is. And 3 more additional factors, folks, for the analytical note takers. About 5 weeks ago, I was attending a 4-day wealth conference with somebody who's a very well-renowned personal development individual who brought in some billionaires. Many of them were World Exorcist Forum. And I use that E as a substitute for another word because we want this video to survive on a certain YouTube channel. And so those billionaires, 3 of them stated, 1, you could buy commodities now. Number 2, one of them said, hey, I was born in the late 1920s. The value of the dollar, the US dollar, if I was told when I was born, my mother gave this to me and said, by 2022, this is going to be worth 6 cents, I would have went back in the womb. His quote, direct quote from a multi-billionaire, very, very well-known individual, World Exorcist Forum now, and just came out with this, which has blown people away. And then in addition to that, we had another one who's a Bitcoin multi-billionaire who has a fund who invests in Bitcoin. And he is talking about, yeah, we're still bullish on Bitcoin, but you also need commodities. And I shared with his name with you offline. So this is a multi-billionaire in Bitcoin space who is World Exorcist Forum, who is saying, yes, you also need commodities. And then we just saw last week, Jamie Dimon, the CEO of JP Morgan Chase, that's 30 trillion in debt and derivatives, right? Which and also got that big fine on the silver suppression
Yep.
and market fixing, said, hey, a hurricane is coming, be prepared. Well, he knows. You can just look at the books like you just shared with us, 30 trillion in derivatives. There's no coming back from that. So listen, folks, it's been scrolling by on the screen, the link. You've got nothing to lose, my opinion, except your savings. If you don't at the very least, have a conversation with one of Dr. Elliott's advisors about how you can potentially protect this. Now, one of the key reasons why I say that is, as Dr. Elliott shared with us last week on our video, about a term called selling away. And in healthcare groups that I'm affiliated with through some relationships with loved ones, those doctors, medical doctors, nurse practitioners, and hospital administrators, and even some that are in the university academic system, when they heard about this, they're like, well, I've never heard my advisor telling me I need to buy silver. Why? And Dr. Elliott said last week, he goes, because it's called selling away. If they don't get a kickback, if their firm doesn't get a kickback, they can't sell it to you, even if it's in your best interest. And you quit a job back when your early days of stockbrokering, didn't you? What was that?
Yeah, back in the late 90s, I did that because I got in trouble for they don't understand what the word selling meant. All I was doing was recommending to clients that they put, like, at that point, like 5% of their portfolio into gold, and I told them where they could call.
Yeah.
I wasn't making any money on it. I was just referring that, hey, you should go talk to these guys. I think they're pretty good.
Right.
So that justified selling away, even though selling generally means you make something on it. They don't care. So the motive behind it is, you cannot recommend anything that you don't sell because the firm won't make money. If you do, you're fired. So self-preservation, your advisors, your brokers, they might be amazing people. They might have good hearts. They might be very compassionate. They might love you, right? But they're not going to recommend something out of self-preservation when they could lose their job in today's economy. So therefore, you're not going to get a truly unbiased answer.
Yeah, and that's a shame too. And they're in a hard rock between the hard place too, folks. Remember, their job, their family, your job, your savings, your portfolio, your future. It can also be a tough gamble. And I'm not using that as a way to gift them an apology by any sense, but this is exactly where we are today. So go to kirkelliottphd.com/sold. Highly recommend it because you've got nothing to lose. It's a little bit of your invested time to understand. You've seen it here. The numbers are there. You can do your research, and you've even got some reports that you share with people too. There's a free report of some sort, isn't there?
Yeah, free reports on pension crisis. I've got a whole curriculum series I'm working on right now on how to own gold, how to own silver, how to put metals in an IRA, understanding inflation. I've got like 11 courses in this curriculum that I'm just doing voiceovers on. Yeah. Call my office. Once they come out, we're going to be able to get those to you, but don't wait till they come out to do anything. It might be a couple months before those are done, but they're going to be amazing. But the point is, we have got to allocate into silver right now because it's the safest asset in the world, has been for about 20 years. If you look at the historical data, and you're never going to hear that from mainstream media or from your advisor because they don't sell it. But the numbers show silver safest asset in the world, gold second, stock market a distant third.
Yeah, exactly. Stocks are toxic right now, which we're seeing. You just heard it from this economist that you've got banks that are crippled and they're insolvent. They're literally moving forward insolvent right now. And some of those banks can be yours. And one last thing, folks, from my career doing real estate investment and having real estate investment companies in Canada, United States, back in the day, leading up to 2008, we saw the insolvency and what happens. We saw what the FDIC does and the Canadian Deposit Insurance Corporation. And by the way, Australians, UK, Europeans, you're not off the hook. Your banks, especially in the UK and Ireland and Scotland, because we have a few of those folks listening, and even in Croatia, had a friend on the yacht going, call me, let me get into silver. And he's scheduling a call with your staff. They will take the money in your bank account to cover their debts. And they just did it 14 years ago to some citizens of the United States that walked into the bank in the 2008 crisis, and there was nothing there because the FDIC says that that money is available to the bank to cover their debts before they cover you. for deposits over 100,000 for the United States.
Yep.
So bear in mind, you may think it's your money that is in a safe haven of these banks or your IRAs, your 401ks. If you do not take action to protect yourself, and you're leaving it up to somebody else, and you don't physically have that tangible commodity like silver available to you in your home and or at a secure depository that's labeled your name, you can talk to Dr. Elliott's staff on how they do that. Then if you lose everything, unfortunately, you know, I mean, I'm at that point in time right now, Dr. Elliott, where I'm just like, if you don't do this with all of the indicators there, you're not either stuck in fear, and fear is causing paralysis. That paralysis of inaction is going to get you financially killed, insolvent, right? Complacency kills. In the military, the Canadian infantry, when I joined, they said complacency kills, take action. It's the rule of 7 Ps, right? Rule of 7 Ps is proper previous planning prevents piss poor performance. I've been up for 14 hours. All right. Pardon me for a little bit of the dialogue rambling on here, but here's the thing, folks, like it's happening now. This is the greatest depression ever. So definitely take action. That's a little bit of a harder close. Like, hey, we need to save the world, and share this with people. Bring your spouse, log on, get those free reports, share this with your spouse, share the video with it, have them go through it, have a phone call with Dr. Elliott's advisors. They've even been on the phone with friends of ours who have brought their advisors on the phone that can recommend physical silver, right? And from my knowledge, hearsay, that some of those advisors went, and moved into silver with you guys. I heard that hearsay. All right. I don't know that directly as a fact, but I heard that around about it. Like how amazing, because you're also opening up the eyes of these financial advisors because they've been trained to do something certain way. And then all of a sudden they learn something new. They have an epiphany too.
Right.
So yeah, beautiful thing. All right. Dr. Elliott, thank you so much for coming on.
You bet.
Busy hours day, and hello to all your staff there. Thank you much. Thank
you so much. It's my pleasure.
Go take care of yourself. You're in wonderful hands. My personal experience as a client, and all the best, everybody. Thank you. Thanks for joining us on the program, ladies and gentlemen. Please like, follow, subscribe, share this with 9 friends and family. And of course, if you enjoy our blinged Buddha firing red pills from his 9 mil, let us know.